Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we are talking about these market conditions. We are having some great moves in these financial markets. The market, I mean, if you're looking at the S&P 500 right now, is down roughly, as we're doing this show, about 15, actually, no, a little bit more, 16% on the year, which is a lot. A lot of people are losing and getting hurt in their retirement accounts. So we've been talking a lot about in that last segment on retirement account strategies to hopefully do better than what your broker might be doing, or advisor or money manager. And we had tickets to a free investing class that we gave away to a lot of people. Texted in. Congratulations to those of you that did that and got set up for this free class. You can text the word investing to the number 210-210 if you haven't done that yet, for 2 free tickets for an investing class and a financial quick start kit to help you get started right away. Text the word investing to the number 210-210 right now. So as I mentioned, Al, the markets are down pretty big on the year. S&P, or sorry, actually that was the Dow Jones I was just referring to. I thought I was doing something wrong there. The S&P 500 is down about 18.5%.
Right. Close to bear market territory.
Exactly. And it had already hit there
It
once
had
this
been
year.
there. Yep.
The NASDAQ is not looking so good, down 28%. And most people were tech heavy in their accounts because tech was so good. Now they're losing it all.
It worked until it didn't.
It worked until it didn't. So you were talking about in that last segment, those wealth strategies. And you talked about fees and just how to have different opportunities to have more longevity in those accounts. Continue that discussion because I think it's so important for our listeners to understand about retirement accounts, 401ks, IRAs. How do you lower your fees in your retirement accounts?
Okay, well, you mentioned a couple things there, but we talk about the difference between short-term income and long-term wealth, and there is a different way that you approach the markets. The short-term income part that we talked about, you're using things like options or the futures market or the foreign exchange market. Those are designed for short-term trades, ideally for short-term trades, and they also have leverage. So you can start with a much smaller account. A lot of people think, it's all over for me. I don't have enough money to participate to have the potential for big returns. Well, the potential is there, especially if you use leverage. So those short-term assets are using leverage. It can be anywhere from 10 to 1 to maybe 100 to 1. So in other words, each dollar that you are investing can control something worth maybe 10 times, 50 times, 100 times that dollar. That's where you get the real benefit from these short-term trading assets. Long-term, that's typically more a stock-type portfolio. The stock market is probably the greatest thing that's ever been invented for the potential to develop wealth. And unfortunately, a lot of people think all they have to do is put together a stock portfolio, put it on cruise control, and when they retire, there'll be a whole bunch of money there. Well, anybody can push a buy button or sell button, but not many people know how to manage a portfolio or manage a trade. So you can have a long-term portfolio that you don't even have to sell anything within that portfolio, but you can use other assets with it to boost the returns, to provide protection, and to participate in these down markets. When we talk about the markets being down, you mentioned the Dow, the NASDAQ, and the S&P being down significant numbers for the year. Did everybody lose that kind of money during the year?
Not everybody.
No, a lot of people were excited about it. Back in the year 2018, I think it was in February, the Dow was down 1,000 points in one day. Goldman Sachs made $200 million that day trading the down market. So if you don't know those strategies that are available to you as a retail trader, as the public, then you're missing out on an opportunity to participate in all the different directions of the market. Most of you are in 401ks, and you're encouraged to continue to put as much money in those accounts as possible, even after a potential employer match has been met. When that employer match is there, that's free money, that's worth taking. But the reason that people are pushing and telling you to continue to invest in the 401ks, is that for your benefit, or is it maybe more for their benefit? Because if you're not putting money in, you're not paying fees to these plan sponsors. So think about it. If these 401ks were there for you, for your benefit, why aren't they giving you advice on what to trade? Why are they charging you high fees? Why are they giving you access to just mediocre choices? And why are they charging you when the market's going down, when you're losing? So most of our students, as soon as possible, will put their money into a self-directed IRA. If you retire or leave a company for any reason, you can roll your 401k, your 403b into a self-directed IRA where you don't have fees. You're not paying somebody to supposedly manage your account, which they really probably aren't doing, but you eliminate the fees. You have access to things you don't have access to in an employer-sponsored plan. You have access to the options market, the futures market, the foreign exchange market. You have access to strategies and assets that will benefit you in a down market. You have access to strategies and assets that will benefit you in a sideways market. You have protection strategies you can use. And if you're already managing your 401ks, which you are, almost 100% of you are making all the choices within your 401k. So you're already managing your accounts. Why not manage them outside of a 401k where you have many more choices, including the ability to have effective protection measures in place?
I'm glad you brought that up, Al. I mean, why are all these things happening to the public? It is for the benefit of their being successful, right? That's why there's big buildings with all these big brokerage names everywhere you go, downtown Minneapolis, downtown Denver, downtown California, wherever that you're at. The public is paying for those. So find out why this is happening to your accounts. Al covers that in these investing classes. They're a 2-hour class. They're free. And you can see why things are happening in retirement accounts, why you may not be reaching your retirement goals, but it takes a little bit of action. You got to text right now. Text the word investing to the number 210-210 for 2 free tickets for this investing class locally at our academies. They're 2 hours. Text investing to the number 210-210 right now. So you mentioned self-directing. How does somebody, we have about a few minutes here, how does somebody do that? Do you got to go to a bank, or what's the first couple steps to self-directing their accounts?
Well, identify the brokerage firm that you want to work through. And in these classes, we talk about brokerage firms, and we don't have a bias as to who you trade through, but we can help you identify ones that maybe are more beneficial based on your trading style. And then basically, it's just doing an application. They'll take care of the transfer of your assets. It's an easy process. If you have questions or you're concerned about it, we can give you advice. We can give you some guidance there. But if you can eliminate the fees as soon as possible, those fees, which a lot of people don't even realize they're paying or think, well, it's just the cost of doing business, of having these accounts. Well, the fees are taking possibly as much as 50 to 75% away from what you could have when you retire. So as soon as possible, eliminate those fees and then give yourself access to things that have much greater return potential. If you lost money, if your portfolios are down now, how are you going to recover? If you just hold the assets you have, maybe a mutual fund, maybe an ETF fund or portfolio, well, you may get some returns when the market turns around and goes back up, and it will, and it probably is going to go up very quickly when it does. But some people are going to significantly outperform. Those are not people that are using mutual funds or having annuities. I mean, ask yourself this: why don't the pros buy mutual funds or annuities? Well, they can't make enough money doing it, and they're not willing to pay somebody fees
But they'll sell them to you.
do that. But they'll sell them to you. So let us talk to you about the assets that are available to you, how you have the potential to significantly outperform average returns, which is what most people are going to be exposed to, and just they kind of accept mediocrity. You don't need to do that.
Yeah.
There is the potential to do better. We can't make any guarantees, but we can give you the knowledge and help you develop the skills to use those things. But you have to take the time. You have to be willing to put the work into learning them, and this is for your benefit. So,
Yeah.
how important is it to you to have financial security?
Yeah, just really invest some time. Invest some time in your financial future. And I get it. People are busy these days. There's a lot going on. School is now back in session, and that's a great thing. Is now kids are at school, and you might have more time to be able to do things, because if you don't do it now, when will things change? And a lot of people have been taking action on these classes. And I do want to give away that special giveaway one more time. We had a lot of people calling in for this 3-day course that we have. Online Trading Academy has these free classes. We also have these paid classes. This is a 3-day course. It's normally $199. I'm going to give it away for 99 bucks for people that want to come to this 3-day deep dive in the markets. How does supply and demand work in the financial markets? How do markets actually move and function? The different strategies for income, strategies for wealth are also covered in this 3-day class, but also our step-by-step strategy that's designed to teach you to make smart investing decisions. That's all covered in this 3-day deep dive into the financial markets. So it's normally $199. We're going to do it for 99 bucks. So you can call in right now. Call 888-682-6466 for 2 tickets for this 3-day class. 888-682-6466 right now. Al, we have a lot of tips, a lot of conversation. We shoot a lot of bull. Let's hear today's OTA tip.
Well, a lot of people are right now experiencing some financial problems. And this is the truth. Successful people spend about 5% of their time on the problem and 95% of their time on the solution. So how about you? What are you doing? Remember, your actions are responsible not only for what happened in the past, but also the present and the future. So if you're not happy with what's happened in the past, you want the present and the future to be different, your actions are going to have to be different. What you do today is going to determine your future. So maybe now is a good time to concentrate on the solution and not let concentrating on the problem control your actions.
And how do you create that? How do you make a better future? 1 step, and then 2 steps, which is 1 step at a time. But you got to get started. Call 888-682-6466 for this 3-day class. It's only 99 bucks. Normally it's $199. For you radio listeners, 99 bucks. As always, same time, same place next week. Until then,